Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here. We've been doing this for over 20 years for individual traders and professional institutions, which I consult with weekly. Okay, this is going to be the weekend newsletter for April 23rd and through the week. So let's go ahead and get this started. Got a lot to discuss tonight. These weekend newsletters tend to be quite comprehensive. This is our back end newsletter recording, so I'm going to go ahead and start this. And let's get started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a nice weekend so far. It's Sunday afternoon, and this is the weekend newsletter for Sunday, April 23rd, 2023. As you can see, the newsletter is divided into 8 major sections. Again, if you're new to Breakpoint Trades, these weekend newsletters tend to be quite comprehensive. We go over a lot of things. Weekend newsletters tend to be anywhere from 40 minutes to almost an hour. Again, we cover in depth pretty much all the markets. So sit back and just listen and absorb and use what fits your trading style. I did add a few trade ideas. We will mostly be going through recently traded setups at the end. Remember, guys, this is earnings season. Okay, so we had a few companies report last week, as you know, Tesla, etc., a couple banks, but this week earning season really begins in earnest. We have Microsoft and Google report on Tuesday after the close, Meta on Wednesday after the close, Amazon on Thursday, and many others. So here is a link to a stock earnings calendar. Again, you can't click on this in the video. I'll put a link to it under the YouTube video, but on the website, standard newsletter format, it's right there. So make sure to check that. Again, we have a lot of, besides earnings, we also have quite a bit of different economic news, such as consumer confidence, GDP, PCE, Chicago PMI, etc. Next, before we get into the regular newsletter, just since these weekend newsletters tend to be quite comprehensive, just want to go over a few things of what's going on here. Quite honestly, not a lot of stuff standing out this weekend. And when it does that, I'm not going to overly analyze things. So here's a daily view of the S&P. As you know, we've had this big coil pattern drawn for a while. We also, it's not on this pattern right now, but we used to have a little bitty coil inside this larger coil that broke out back in March. That obviously played out to the upside. And you can remove that. So we've just been upward channel here. We've been testing this downtrend line. We have a open gap here still from August that was never filled. We have this resistance from early February, which we're not quite back to. Market's just kind of drifting higher. We have a lot of earnings this week, which will likely be the catalyst. Again, markets in the past have generally held up well during earnings season because, let's be honest, a lot of analysts cut earnings expectations earlier and are able to easily meet them. So we'll see if that ends up being the case or not. The market holds up through this earnings season or not. That remains to be seen. That's usually the case, so we'll see. Again, really not a lot here, guys. We're still above the 20-day moving average on the S&P, right around the 9 EMA. Here's your big resistance levels above around the 4,200 area, that open gap from August, and of course the 61.8% fib retracement from the January 2022 highs up there at 4320. Short term, last week we did have a little negative divergence on the 5 RSI, a little trend line break on the 14 RSI. So a little warning there, and these trend line breaks in the RSI have been pretty decent signals for both buy and sell signals, but otherwise nothing real definitive yet. Next, image number 3. Here is the mapping we've been showing. Again, the thing about Elliott wave, guys, as you know, we don't show it that often is because there's always many different counts. It's very subjective. All right. And but this is one of the counts we've been following. Back in early April, we favored this being a wave 3 because it was a strong move up. And that's one thing on Elliott wave that isn't subjective. Sometimes it's easy to see, easy to differentiate if something's in a wave 3 or not, just based on the price action. So we expected a wave 4 consolidation in early April, which we got, and another push higher in a wave 5, which we got. Now, if you can see here, we broke this uptrend channel last week. We had a little MACD divergence, RSI divergence. Did that complete that wave 5? And we're now in this wave 4 of C pullback. That's the big question here. If this is the case, then I would expect some sort of more of a weakness here early this week, maybe some sort of coil, and then I expect another move up, at least in a wave 5 of C. All right, and again, it's possible that we did not complete 3 of C. So as I show wave 5 here, this is wave 5 of 3 of C. Okay, it either completed early last week or it hasn't, but we did break the uptrend channel line. We back tested it, so it's possible that we broke it again. If that's the case, I'm expecting this consolidation of a wave 4 of C, and we'll see if that's the case. So that's what I'm watching real close. And then finally, image number 4. Here's a 30-minute chart, and you can see late last week on Thursday, we broke this little wedge. We back tested it. Beautiful area to take a short. So some of you may be short from this back test to this trend line. And if you are, that was a very objective entry. Just simply have a stop in place. Again, still remains to be seen if this was the high of that wave 5 of 3 of C or not. Okay, but that was an objective entry. So we'll see how things act early this week. Again, we have a lot of earnings reporting, so we'll see how that goes. Next. Item number 5 shows the index sector table, what transpired last week and on Friday. Friday was just marginal gains, a very choppy day for the indexes. Look at this, very small moves. For the week, the indexes were just slightly down, except for the Russell, which actually gained 0.59%. But small moves here otherwise, a lot of chop last week. And as far as the 21 market sectors we follow, basically kind of a 50-50 mixture of up and down. Weakness in the energy area, XLE, OIH, semiconductors, a little bit in technology, communications, services, and of course, metals and mining. Gold stocks, precious metal stocks have been pulling back from their recent gains, so you see that. Big gain in home builders there. Utilities, some of the defensive areas still remain strong. US dollar was up 0.25% for the week. Cryptocurrencies were down strongly for the week. We showed a rising wedge last week, and that played out beautifully. So hopefully you guys got us some of the crypto stocks. Commodities, most of the downside here. Natural gas had a pretty good bounce. It's been very oversold. Not surprising, but big move down in crude oil, down 5.6%. General commodity index down 2.7%. Copper down 3%. The ags were down. Sugars had a big move. I haven't showed that for a while. Precious metals were down. Gold and silver and GDX, the stocks, they led to the downside. They led to the upside, and they started leading to the downside about a week or so ago, and that's been playing out. Again, that sector's had a heck of a move, so it's digesting those gains. And as far as the bonds and interest rates, 10-year Treasury yield up about 1.4% for the week. TLT 20-year bond down 0.65%. Next, item number 6 shows the economic news calendar. Again, we have a lot of stuff on the docket here, from housing price index, new home sales, Case-Shiller consumer confidence on Monday, durable orders goods on Tuesday, GDP on Wednesday there, PMI on the 28th, and again, tons and tons of stocks are reporting earnings. So we'll see if the analyst lowered their earnings enough so that these companies can meet them. Again, over time, though, I do believe we're going to see an earnings crunch, guys. Whether we don't see it now, I think we'll eventually see it. There's just too many of these companies laying off people. People are really cutting back on spending. I mean, you know what's going on in the economy. Next, before we get into the general market analysis, let's talk about the mechanical trading system. So this image here, let me zoom out a little bit, shows you the 4 open trades on the 22 systems. The reversion to mean, we have 21 reversion to mean systems and one breakout system that we run and send out trade notifications for on the SPY ETF and MES futures. So we got, they're basically pretty much hedged. So on SPY and ES, the breakout system triggered on March 31st. You could see it there. Both at the same day. They're still long and they have trailing stops going on that raise every day. And at the same time, we also have a couple open shorts. One open short on the SPY, on the DVDS system, and one open short on ES. So almost perfectly hedged here, long and short. Next, image number 8. This shows you the basically a good, nice clean table showing you the systems. So this table here has the 21 reversion to mean systems and the breakout system. Again, you can see what's, all these systems are in cash, the reversion to mean systems. The breakout system's long from the 31st. You can see this current stop on SPY is about 405.50, on ES 41.30. That's the stops, which are adjusted every day. And we have these open short positions. Actually, 2 entries short on SPY and 1 entry short on ES. And below here, we have the KISS following trend systems. So these are more for 401k. They're long only. They're, they try to catch longer term trends. We're overall still what I think in a bear market. So overall, these aren't going to stay long for long periods of times for things like SPY and triple Qs, but you can see they've been long here for a while. Triple Qs, KISS trend system's been long since the 15th. It has 3 higher low trailing stops. We call those smart trailing stops. And only thing major indexes that's flat is IWM. I also added GLD and GDX here. They've been long since March 10th and March 13th. GDX has raised its stop 8 times. Again, guys, you can look at these in those STS tables where we update these. Very useful guide. Next, since we're talking about the systems, I'm actually going to add possibly another system to the mix. This is the VIX Bollinger Band system. So here's a daily chart of the SPY ETF, and below here, various moving average indicators. But right here you have the SPY or the VIX, the VIX plotted with Bollinger Bands. So the signals come whenever the VIX is outside its Bollinger Bands and closes back inside for longs and shorts. You can see some of the trades here. It catches very nice trades, and I'm thinking I'm going to add this to the trade signals to the website that I send out. Next, image number 9. This show you the statistics to the VIX Bollinger Band system using SPY, a profit factor of around 19, about almost 90% winning trades, and the drawdown's about 7%, max historical drawdown. Next, image number 11, here's the profit curve, very nice profit curve. So these VIX Bollinger Band systems are good enough that, like I said, I'm probably going to go ahead and add these to the official trade signals to the website. So if you're a subscriber to Breakpoint Trades, you'll get notified via email or SMS whenever these systems do a trade. Next, chapter 12, here's GDX daily KISS trend system. Again, you can see how this went long back on March 10th there. Very nice entry. You can see it was long back here in January, got out, hit its smart trailing stop, then got back in there, and price is currently pretty close to its smart trailing stop. We'll see if it bounces off here or if it hits it, okay? But it's getting pretty close there. It was a nice signal. Next, chapter 13, here's the gold KISS trend system. Again, all these are available in that STS tables. Next, image number 14. Here's one of the major indexes. This is the QQQ NASDAQ KISS trend system. And again, you can see it went long there in mid-March. And so far, it's raised its stop 4 times. Smart trailing stop still pretty wide there, around 303. One thing to note, moving average ribbon BPTMA is starting to pinch into the ribbon, so we'll keep an eye on that. Okay, so let's go ahead and move back to the general market newsletter. So image number 15, this shows you a weekly chart of the 5 key major indexes, the Dow, S&P, NASDAQ, Russell 2000. And you can see we're still in these patterns that we've been showing. The Dow pulling back a little bit from this little downtrend line here. S&P, NASDAQ still in these sort of uptrend channels. And IWM at the bottom, still struggling at this broken trend line. Next. Image number 16, here's a weekly view of the S&P. Again, as you know, we called a bear market back in January 2022, early 2022. That was a great call. Last year was not a great year for the market. We put in a trade low in October. We had a nice divergent low on the daily chart. We had a little 5 waves down. On the weekly, we were right at this 200-week Bollinger Band. Guys, on a weekly chart, the 200-week Bollinger Band works extremely well longer term. So it's a good chart to have on a weekly chart. We bounced off of that, and we've been just chopping up here. Again, did that end the bear market, or is this overall some sort of choppy uptrend in a bear market? That's what I favor overall, just because of the backdrop of everything. I think the everything asset bubble we had back in 2020 through 2021 and all the debt and everything else has to be worked off. It's not enough time to end that, and given the inflation, given interest rates, stuff like that. So anyway, but otherwise we're just continuing to uptrend. My thought, guys, if you want my thoughts, what maybe happened this year, short term, maybe we get a little pullback here. But I think in the summer we could shop around. We may even get back to this 4,300 area, 61 fib. And then my guess would be if the next leg of the bear market begins, it's going to be sometime later summer into the fall, something like that. Okay. So it could be a lot of chop around in the summer. Plus the summer is a good time to go away and do other things, not focus on trading as much. But keep your web membership here. Anyway, another thing to monitor is this trend line on the 14 RSI. It'll be a good guide to get short or get out of the market if this is broken. But again, that's a ways off. Maybe something to occur later this year in the summer. Next. Image number 17. This shows you a weekly chart of the S&P. This is our KISS trend system on the weekly. And, it got out basically in January of last year as well. And it's been long here. The stop's still pretty wide here. Otherwise, a couple things here. You can see some system trades that I added additionally to the KISS system. By the way, these are nothing to do with the KISS system, but I thought they looked nice on a weekly chart. So this here is the MACD KISS stochastic short whenever the MACD pinches, but it doesn't cross, and the 5 stochastic gets overbought. Got a nice objective entry there. This is a short that occurs near the ATR, which was a good short. And these longs are the opposite of the MACD KISS short. They're the MACD KISS long. MACD KISS stochastic oversold. You had a nice long here, and you had one back here. And you had one back here in 2020 when the KISS system was long. You were uptrending, you pulled back, and you can see the setup occurred there. But that's an example of some of these mechanical systems. Next, chapter 18. Here's a monthly view of the S&P. Again, guys, this just shows you kind of this range. And overall, if we do kind of chop higher into the summer, my thought would be we work up to this upper range. But I don't think we're going to go back to highs unless the Fed completely pivots, doesn't worry about inflation, and goes balls to the walls. And, basically I don't see the S&P going, up there to 5,000 and new highs unless, the Fed's okay with us having 10 and 20 and 30% inflation. Next. Chart 19, here's another monthly view of the S&P going back to the early 90s. Again, this monthly chart, very good guide. First off, we've had this bull market since 2009, right? We called the end of the bull market in late 2020. We've had a pullback here within this channel. We haven't lost the channel. I still think over time we'll test the channel line and probably one of these major fibs. Again, if you look at some of these fibs, 50% fib 2700, 38% fib 3200. I think in a normal bear market, those are easy objective targets over time. Okay, right now we're still sort of in the lower portion of the channel. This 14 stochastic on a monthly chart's a very good guide. Whenever it falls below 50%, tends to correspond with bear markets, like you see here in late 2000 to 2003. Of course, the 2008 bear market. And during bull markets, it usually finds support around 50%. That obviously occurred. It fell below 50% last year for a bear, and now we're testing the underside of the 50%. You see that? Next. Chart 20, here's another chart of the S&P going back to 1973. So these are kind of your long-term uptrend line. We're so far away from that, obviously. Here's the channel. And again, you can see how just overextended this ribbon got at the end of 2021. And over time, that needs to be worked off. And it's worked off a little bit, but I still think over time it needs to work off. You can see the MACD on this quarterly chart's also starting to cross to the downside. MACD on the quarterly chart has not crossed negative since 2008. Next. Chart 21, here's a daily view of the S&P. Again, I already discussed this. We've been in this uptrend channel. We're above the 20-day moving average, right around the 9 EMA. If we get a higher push, we have this February high here, and this open gap from August would be a target, and of course, the 38% fib, or the 61.8% up here at 43.25. We do have a little oil leaking here with the MACD trend line break, so that's concerning. Next, chart 22, here's another daily chart. Shows you the same thing. Got that big open gap up there. We're right up in this resistance zone here. We had some RSI divergence last week, pulling back from, and the trend line break on the RSI. Next, chart 23, here's a zoomed in daily view. Again, you can see basically testing this little tight uptrend channel. A couple dojis here. Next, chart 24, here's the daily KISS trend system. Again, no changes here. The smart trailing stop, unfortunately, is still pretty wide on here on this daily. I do think it will eventually have an opportunity to move up. Short term, we get a pullback. This ATR is your support. One thing to watch is this BPTMA into the ribbon. It's pinching red. So we'll keep an eye on that. The 60 stochastics down here is above 80, so that is a positive. It's more of the market's in a decent position. Next. Chart 25, here's the 4 time frames we like to follow. The daily over here, we broke over that resistance cycle. It's now support. You can see it corresponds with the ATR. Same thing for the half day. ATR support on all these time frames. A lot of sideways movement last week, as you can see on these lower time frames. Next. Chart 26, here's a half day chart of the S&P. Again, you can see this inverse head and shoulder pattern that we were showing back in March played out clearly. We're uptrend line here, little channel, so we're testing this area. So the question is, can we bounce here again, or are we going to pull back more? I've been favoring more of a pullback here as a wave 4. So we'll see if we get that. Futures did open tonight. They are down a little bit. You can see that last high had some MACD divergence and RSI divergence. Next. Chart 27, here's the 2-hour view showing that wave count where, if we put in a wave 5 there, it was likely a wave 3 of C, and a pullback consolidation here would be a wave 4. And then once it's complete, we get a new move in a wave 5. Because this wave 2 back here was more of a zigzag, it's also possible that, wave 4 could be more of a coil by wave of alternation, if you know your Elliott wave. Usually your wave 4 and wave 2 are different. So could be a coil where you see something like this and then a breakout. It's also possible that this puts in a high over here, though I don't favor that for now. What I mean is it puts in a bigger top. But I think favor more of some sort of wave 4 consolidation here. Next, chart 28, here's a 60-minute view with a channel. We broke that channel last week on Thursday, back tested. That was an objective area to take a short, put a stop up in here. So if you're short, it was objective. Just have a stop somewhere above this channel line. You can also watch this little lower trend line here as a support that needs to be lost to get more downside move. Next, chart 29, here's a 60-minute chart of SPY, the same thing. If we do get some movement to the downside, there are a couple open gaps down here to monitor. Next, chart 30, here's the 30-minute view, which I discussed early on in the newsletter. We broke this little wedge last Thursday, back tested it. Again, that was an objective short. You could have a tight stop somewhere above that if you're short. Okay. Again, if we get some nice downside flush early this week, there are a couple open gaps down in here that could be magnets. This, of course, is a big support area. Next, moving on to the triple Qs, chart 31, weekly view of the triple Qs, down 0.6% for the week. You can see not a lot's changed here. We broke above the downtrend line from the January highs early this year in January, rallied up, formed a higher low, which corresponded right with this moving average ribbon pinch. Right now, just kind of consolidating above the 38% fib. These would be higher target areas if the market does hold up into the summer. But overall, again, I do believe we'll form some sort of lower high this year and have another major decline. Next, chart 32, here's the daily view. Again, we've been working on this possible wave C5 of Y. Right around the 20-day moving average here, a lot of chop. Still holding that 20-day for now. We'll see how we open early this week. Next, chart 31, here's the 2-hour view. Again, so far a series of higher highs, higher lows. Right now we got a little channel pattern to monitor. Moving average ribbons are pinching here, which means energy is building. Next, chart 34, here's a 60-minute view. Again, you can see your higher lows. This would be a good area for a stop. So if you're long the Qs, you want a tight stop right here at 314. Unless you're using that KISS trend system, which is wider than that, obviously. Next, chart 35. Here's the 4 time frames we like to follow. Very similar to the S&P. Again, we have the ATR on these upper time frames as support. We had an end of bull cycle resistance on the half day, resistance on the 130-minute. Right there, we couldn't punch through that last week, and the ATR. Next, chart 36. Here's a chart of the NASI summation index plotted with the 2 and 5 exponential moving averages. And I've been talking about this, but you can see how these little buy signals and sell signals when these moving averages cross overall follow the triple Qs. But that was not the case recently. Look how long it took for this to go back on a buy signal. So you get a lot of negative breath there. Basically, just a few handful of stocks leading the market on the NASDAQ especially. So that's what that shows. So you have a big old, divergence here with your price, as you can see, between the indicator. Next, chart 37, IWM, Russell 2000. Stalled so far the last couple weeks at the 200-day moving average. It's right now it's forming a coil here, so likely a bigger thrust move is coming. Got the 50-day, 200-day moving average above, and we'll see which way this breaks. Next, chart 38. Here's the weekly view. Again, last year it bounced off this long-term support, and it's just kind of chopping around in this larger pattern. Next, chart 39, here's a 2-hour view. You could see this tight coil forming here better than on that daily. So this could be a trade. You could trade this in the direction that it breaks. Nice coil forming. So there you go on the indexes, guys. Again, we'll see what it does early this week. Futures are down a few points tonight, but not that much. Let's move on, look at some indicators. Chart 40, here's the VIX. So the VIX have been declining. It broke down from that little consolidation pattern a couple weeks ago. That led to more market upside. And still a little ways from its lower Bollinger Band, but the Bollinger Bands are starting to pinch a little bit. So keep an eye on that. But it is downtrending. Next. Chart 41, here's a 2-hour view of the VIX. Short term, what concerns me is this wedge. You have a falling wedge here, MACD divergence, and we slightly broke the wedge and we're back testing it. So that was an objective area to take a little short with a tight stop late last week. Next, chart 42, here's a comparison chart of the VIX and the VVIX. The VVIX is the volatility index of the VIX. So late last week, the VVIX started rallying up while the VIX was selling off or benign. Basically, people were buying options ahead and hedging. And you can see via the VVIX VIX ratio how it spiked. A lot of times when it spikes can occur sometimes near market highs, and we did get a pullback late last week on that. Next. Chart 43, here's the VX then. That's the volatility index of the NASDAQ. And it was below its lower Bollinger Bands here. It's hard to see that, but it did give it an objective sell signal right here. Whenever it's above its upper Bollinger Bands and closes back inside, that's a buy signal. Next. Chart 44, here's a comparison chart of the S&P. This is a 60-minute chart to the high yield corporate. And what was showing up early last week was this very obvious divergence. S&P formed a higher high, high yield corporate formed a lower high, and then we're getting some consolidation. This is a very good chart to watch over time whenever you get these divergences, because the two tend to move together, and when they have these divergences, tend to mark little inflections. Next. Chart 45, here's high yield corporate bonds themselves. Again, the market tends to move with this. This is still holding up fairly well. It's still holding its 20-day moving average, so that's a positive for the market, unless that breaks. Next. Chart 46, here's the S&P large cap advanced decline versus the small cap advanced decline. So back in December and March, and of course October, you had a divergence between that and between these two that picked these market lows. Even the last one in March there. Now, recently you had a negative divergence. Okay, so that's a warning. Next. Chart 47, here's the NIMO right here with the histogram, and this the S&P above. So we've had this divergence building on the NIMO, and the histogram did go negative last week. So that's a little potential warning. In the past, when the NIMOs went negative, that's been a warning sign for a pullback in the market. Now, again, it could just flip back up here. It's only negative for a bar, but it is something to be aware of. Next. Chart 48, here's the bullish percent SPX. For now, this is still fine. You know, this tends to be kind of like a barge. It's a slow moving, slow turning barge. This went above its moving averages here back in March for a buy signal. So it's still a ways off from giving a sell signal, but something to monitor over time. Next. Chart 49, here's the NASDAQ with the 52-week highs and lows. And one thing that kind of stands out a little bit here, guys, is you could see the highs back there in February, the new 52-week highs, it spiked. And right now, you know, essentially the NASDAQ is right at those same levels, but notice that the 52-week highs is much lower. So you do have a divergence there short term to be aware of. Next. Chart 50, here's the PMO system. So this is kind of a sort of a mechanical like system. When it's really oversold like this and curls up, you get your buy signals. Whenever it's overbought and curves down, you get your sell signals, and your real sell signals when it falls below 65%. So it was overbought here last week, starting to move down here. It hasn't lost the 65% area, but it's something to watch. So there you go on the indexes or indicators, guys. Let's go ahead and move on. Chart 51, here's the Okay, I had to refresh my charts. They got out of order a bit. So chart 51, here's go and move on to the market sectors. We'll go through these quickly here. So XLK technology, it's been wedging here. We closed below the 20-day moving average this week. But again, we got a lot of earnings this week. We have, by the way, we have Microsoft and Google reporting this week. Meta and Amazon. So a lot of tech companies reporting this week. So again, we'll see. They make up such a huge percentage of this XOK. You can see just these three stocks here, Apple, Microsoft, Nvidia, make up 52% of it. Next, chart 52, XLF financials. We had this fifth wave low there in March, and so far we've had a decent rally, but we're stalling at the 200-day and 50-day moving average to be expected. That's a big resistance area now. Next, chart 53, here's the bank index. Again, this had a waterfall sell off. Not as strong a bounce as the financials for obvious reasons. Little pop out of the coil here, but so far I'm pretty muted. Next, chart 54, here's KBE. That's the bank ETF. Here we got this coil been monitoring, and we'll see if they can hold this support or not. It needs to hold this support, rally up, and break out of this. If not, this is your last higher low. And if you're long, that's a good place for a stop. Next, chart 55, KRE, that's the regional banks, which have been absolutely pummeled. And they're overall still in the coil here. The bearish view would have this as some sort of fourth wave coil, but the coil is getting pretty long for a fourth wave now. Next, chart 56, consumer staples. This tends to be a safe haven, and it continues to push higher here. In fact, this little divergence is almost being negated now. It's basically testing these recent highs. Nice move out of this pattern. Next, chart 57. Here's a chart that is a little concerning on the market. So this is the S&P up here, and below is the inverse XOP SPX ratio. The two tend to move together, but when you have these divergences show up, when one forms a high, one doesn't, tends to be a little warning. And while the S&P has moved up here decently, this continues to move lower. Again, that's because XOP has been strong. Next, chart 58. Here's the bullish percent Rinko chart for the XLP consumer staples. Very clean chart. You can see you get your buy and sell signals via the parabolic SAR. It's been on a straight nice buy signal here. It is getting up at 75%, so working its way. When these bullish percent charts are down here, you're oversold. When they get up here near the 75, 80%, you're getting overbought. Next, chart 59, here's utilities. This area has also been defensive area. It still looks very healthy. You got a little resistance right here. Next, chart 60, here's the utility index as a Rinko chart, bullish percent. I can see the nice clean signals here recently. Next, chart 61, semiconductors. They recently lost a little support. You got this uptrend channel line to watch now. Again, we got a lot of earnings this week, guys, to act as a catalyst. Next, chart 62, XLY consumer discretionary. Got a tight coil forming here. This could be traded. Next, chart 63, healthcare. It's been very strong as well, another defensive area. Next, chart 64, XBI biotech. This area has moved up nicely. In fact, it's got a bull flag here. So this could be a trade idea over this 82.80 high. Next, chart 65, real estate, IYR. You got a diamond here. So let's see which way this breaks. Again, we have some housing news this week. Next, chart 66, XLE energy, pulling back a little bit. You got the 20 and 50-day moving average right here. Crude oil has been quite weak, but this is holding up fairly well. All right, that does it for the sectors. Let's move on to commodities. Chart 67, before we get to commodities, here's the bullish percent energy index, BPNR. Kind of a this bullish percent chart. So it's been pulling back here. It's still over this 20 MA. Well, we'll keep an eye on that, but it is leaking oil here a bit. When it was down here at 7%, whatever this was in March, that was that was quite oversold. Next. Chart 68, DBC Commodity Index down 2.7% for the week. So overall, still kind of chopping around lower, but I do believe this isn't a long-term bull market. Next. Chart 69, here's the daily view. Lost this steep uptrend line last week. You have the 50-day here and this bigger downtrend line now as support. You have the moving average ribbon pinching here, which is an area to watch for a potential bounce. Next. Chart 70, here's the bigger picture DBC, this monthly chart. Again, to me, this just looks bullish. You know, this consolidation over the last 10 months, 11 months, looks more like an ABC, light volume. Moving average ribbons got super overextended mid last year, but it's now been working a lot of that off. But this overall looks bullish longer term. Next. Chart 71, here's a ratio chart, DBC to SPY. So this is commodities to SPY. And you can see, you know, they've been downtrending. You know, overall, the general market's held up better, or since June of last year where the commodities topped out. But you could see this very obvious falling wedge forming. So this is something to watch. If this ratio breaks out of here, that would be super bullish for commodities, guys. So that's something to be mindful of. That starts to occur, go long some of these commodity ETFs. Next. Chart 72, crude oil weekly view down 5.6%. So nice decline, pulling back from this 50-week EMA here. About a month ago, it bounced off this 200-week moving average. That was a good buy down there. Next. Chart 73, here's the daily view. Again, perfect area for it to pull back about 2 weeks ago is right at that 200-day moving average, and we're right now at the 50-day. We'll see if we can hold that or not. Stochastic's oversold now. Next, chart 74, here's the OVX volatility system for crude oil. This went on a buy signal back on March 20th. Again, the buy signal was whenever this was outside its Bollinger Bands, came back inside, and I've been waiting for an overall short signal. That's when this is below the lower Bollinger Bands, which is, you know, still a long ways off from happening, but we'll keep an eye on that. Next. Chart 75, natural gas up 13.9%. Again, nice move, basically back to its 9-week EMA. Nice reversion to mean move. Next. Chart 76, here's one of the tradable ETFs, UNG. Got a wedge there that's trying to play out a little bit. Though, this is only up 4.6%, so it's lagging the overall commodity. I really don't like some of these commodity ETNs like this because you get these K1s. Next. Chart 77, here's copper. Pulled back, breaking a support here. That's a short-term warning on it. Next. Chart 78, DBA, agriculture ETF. Still ended up, well, just slightly for the week. Well off the highs, though. Inverted black candle there. Next. Chart 79, here's the daily view. Again, nice rally from March low. This was resistance. This is now potentially support on this pullback that I'll be watching. Finally, chart 80, here's sugar. I haven't looked at sugar for a while, by the way. There's various ETFs for it, but heck of a move here in sugar. Next. Moving on to interest rates and bonds, chart 81, 10-year Treasury yield up 1.4% for the week. It bounced off that lower channel line a few weeks back as the MACD had recycled back to zero. Put in a pretty decent top there in August, which corresponded with the market lows in October. Moving average ribbon, again, you can see how these ribbons are very useful, guys. When they pinch, that's when you get your bigger moves. And when they get too wide, expanded like this, that needs to be worked off. And that's been worked off a little bit. You can see they're not pinching like they were back in the time frames, but it's not as wide as it was. Overall, though, still in this channel. Next. Chart 82, here's the daily chart. Again, rallied up near the lower channel line. The question is it going to form a lower high within this channel? Next, chart number 83, here's TLT 20-year bonds. It could not get above this horizontal resistance. It's been pulling back. Got a little higher low there at 103.50. We'll see if it can hold that or not. Not looking too hot. Next, chart number 84, here's the yield curve, 10-year divided by the 2-year. Again, as you know, yield curve has been negative since mid last year at least. A recession is coming, guys. We know it. And the question is, how deep will that recession be? But it's inevitable. Next, moving to cryptocurrencies, chart number 85, Bitcoin. Steve drew this as a rising wedge over a week ago and played out beautifully. Again, the wedge had 5 points. So from an education standpoint, guys, 1, 2, 3, 4, 5, and MACD divergence. So that's a tip, guys. Pro tip. Wedges have to have 5 waves and they have to have a MACD divergence. If you don't have a divergence, then you're probably in some sort of wave 3. But this wedge is playing out beautifully. If the wedge plays out to symmetry, measures to around 26,000 on Bitcoin. Next, chart number 86, here's a 2-hour view. Amazing example of technicals here. Tight coil here that busted to the upside in April 10th, and then you formed a little slanted head and shoulder here, broke that, rallied up, back tested it. Just beautiful, gorgeous. It's been downtrending since. Next, chart number 87, US dollar weekly view, down 0.3%. Nice correction in the dollar, obviously, since October of last year. Going to be monitoring these fibs in this downtrend line. Next, chart number 88, here's a weekly view of the dollar. This is a channel we drew early last year as a potential 5th wave high, and that's been playing out. So kudos to Steve for drawing this about almost a year ago, this weekly chart. Next, chart number 89, here's a daily view of the dollar. Again, you have a potential wedge here that we're monitoring, but so far it's just meandered a little bit out of the wedge. It's really got to get over this 20-day moving average. If it can do that, then it can maybe have a decent bounce here. But for now, I'm going to still monitor that. Next, looking at other currencies, chart number 90, here's the Japanese yen. Just wanted to follow up on this. This played out absolutely perfect. I talked about this big support in 1998, and that's where price bounced off. Look at that. Just absolutely textbook how that happened there. So, sorry about that, guys. I'm just trying to, there we go. Next, chart number 91, here's the euro. Again, all this corresponded with the US dollar pulling back, but the euro, great example too. You got a bullish symmetry break here in November, and that led to nice higher prices. Let's move on to precious metals. Chart number 92, gold, weekly view, perfectly stalled right at the big weekly down channel line. So logical area to take some profits, right? Not logical rally down here off support. Next, chart number 93, here's a daily view. Again, beautiful rally off that October-November double bottom. Got overbought, RSI divergence, the GDX-GLD ratio, the stocks short term have been leading down. So that gave you a nice little sell signal. Remember this drawing trend lines in the ratio, excellent. Good sell signal here, good buy signal here, good sell signal here. But again, overall, we're uptrending. You can see a channel. I added some fibs here to monitor, 38% fib, 1967, 50% fib, 1937. These are some areas I would be looking to buy gold again. Next, chart number 94, here's another chart of gold, same thing essentially. Next, chart number 95, here's a monthly chart of gold. So last year I talked about that this big consolidation looked like a big ABC 3-wave, right? 1, 2, 3. A, B, C, 4th wave. And big rally this year. Possible that we're started our 5th wave. We're pulling back here. What I favor is a higher low. Maybe this is a wave 1 of 5. This would be a wave 2 of 5, then we go up in wave 3 of 5. If this plays out, this big cup and handle look, we could see gold maybe 2,500, 3,000 eventually. Just something to be aware of. Next, Trevor, 96 silver. Silver got a little ahead of itself, pulling back. Now you got some support zone right around here. Next, Trevor, 97. Here's the weekly view. Broke above this weekly downtrend line, which is now potentially support. This was a beautiful area to go long back here in this demand zone that we drew way ahead of time before it rallied off of there. Next, Trevor, 98, platinum. Haven't looked at this in a while. Platinum took out resistance. It's going to move with gold moves higher over time. This will move higher as well. It is a little overbought here in the RSI though. Next, Trevor, 99, GDX gold miners on the daily or the weekly logically found resistance at this channel line. Retest last week or the previous week and pulled back last week 4.2%. Next, Trevor, 100 GDX on the daily. Again, beautiful buy signal here back in early March on this RSI trend line break. You had a divergence here as well. Kind of a double bottom. Nice rally. Pull back. Now we're testing the 20-day moving average and the January high. So we'll see if this can hold or if we want a little more consolidation. Again, they got ahead of themselves and we favored a correction. Next, Trevor, 101. Here's another daily chart showing the GDX daily ratio. You got a nice trend line break here. We pulled back to this potential support area. Remember on the KISS chart, we also, the smart trailing stops right around here. Next, Trevor, 102. Here's a 2-hour view. So we knew a pullback was coming. We were monitoring this uptrend line here and on the ratio, which was broken about a week ago. And it gave you an objective sell signal. Next, Trevor, 103. Here's dust. That was a way to play a pullback in the precious metal stocks. And you can see out of this channel, it's given a little trade. Next, Trevor, 104. Here's the GDX GLD ratio, the ratio itself. So again, it's been pulling back as we have a little correction in that stocks. But overall, again, moving averages are very bullish here on the ribbon. So overall, this looks like a pullback in an uptrend. Next, Trevor, 105. Here's the bullish percent gold miners index, BPGDM. Now it has rallied up here to about 70, almost 76%. So whenever this was down here in October at freaking 3%, that was the time to buy a bunch of gold stocks. Remember, these bullish percent charts, guys, can go from 0 to 100% only. And so getting up here, getting a little overbought, again, it doesn't mean it can't go up into the 80% area, but it is not as low risk as it was back there in March when it was in the 30s, or obviously in late September, October when it was down in the below 10. Next, Trevor, 106, AU. Again, some of these stocks have had massive moves. This is pulling back a little bit. Great move if you're in this. It was time to take some profits. All right, guys, follow on other trade ideas. So chart 107, Apple. Apple still holding this uptrend line, this channel. We got a higher low here. Apple does not report next week. It reports on May 4th. Next, Trevor, 108. Here's the Apple 2-hour view. Still in this, like I said, just channel for now. Again, Apple is such a big component. We got to follow it for the general market, obviously. Next, Trevor, 109. Here's Tesla. This is a 2-hour view. We had a coil here. We expected a breakdown last week, and that's what we got, especially with earnings. Now, it did meet a symmetry move. So basically a 1-to-1. This movement added to here, basically we tag that. And the ribbon's pretty wide here, so if the market were to bounce into earnings a little bit, then maybe this will bounce. Next, Trevor, 110. Here's McDonald's, just continues to trend up, melt higher. Now this does have earnings this week, but this was the long idea of ours back in March. So congrats if you've been riding this thing. Just trail your stop up below the 9 EMA there. Next, Jarbor 111 APLS was another long idea of ours back in March, right here at this little trend line break of this big cup and handle. This puppy just continues to play out. Look at this. Just trail the stops up. Next, Jarbor 112 SPNT, another one, a long idea of ours from March that continues to hold up very well. Next, Jarbor 113 Clorox was a long idea of ours last week. Rising wedge broke out on Thursday. Nice follow through on Friday. Now you might, just from an educational standpoint, you might say, well, you said this is a rising wedge. This was a rising wedge, but notice the slope here, guys. So here's a pro tip, something I've learned. Whenever the slope it's not steep enough, it's more flattish, these wedges tend to break up. Now, when you have a wedge that's more like this, a steeper wedge, then these wedges will tend to break down. This wedge was not steep enough, and so it broke to the upside, which is usually the case. So that's a little pro tip on the wedges, just given the slope. Next, Jarbor 114, here's Toll Brothers. We had some long ideas in these home builder stops last week that played out. Nice move. Hope you took some profits on Thursday, pulling back a little bit. Next, Jarbor 115, KB Homes, another one, kind of a cup and handle. Still looks decent. Next, Jarbor 116, Nail, the triple long ETF for home builders. This was an easy way to play it as well. Resistance was around this 46 area. Next, Jarbor 107, IoT was a long idea of mine early last week that continues to hold up well. Next, Jarbor 118, BTAI was a long idea that broke out early last week on Monday. Holding up well here. 50-day moving average just above. Next, here's some setups to monitor if the market holds up. Here's Rambus. Again, you need to check earnings for these things, guys. So still has this coil pennant forming here. Next, Jarbor 120 CDZI, kind of a potential cup and handle. If it needs to hold this area though. Next, Jarbor 121 AutoZone. This is a weekly chart. Not really a trade idea. I'm just commenting how well AutoZone's been doing in the bear market. Did amazing last year, doing well this year. Again, in a slowing economy, more people are fixing their own cars. Next, Jarbor 122 AGEN. Here's a new one. This is a biotech, tight little coil here, flag on a break. I would target it around the 205, 210 area as a target. Next, Jarbor 123 ROIV. Resistance right here at 9. Decent volume. If it can break up, target would be $10. Next, Jarbor 124 MCRB, another biotech. Had a coil here, kind of a move, a little sloppy action recently, but the volume patterns are decent. If it can work higher, target area up here around 750. All right, guys, that will do it. Quick check on the futures. ES futures are down about 7 points. So again, not much going on in the futures market tonight. We'll see what happens this week and see you guys tomorrow. Take care.